Good evening. Ira Epstein with your Spider ETF stock market wrap-up. And this wrap-up is for the evening of Thursday, the 20th of March. You wouldn't know it, but it's spring. We started off in Chicago with a blizzard. I mean, literally a blizzard. It's sunny as can be. Everything is melted. You figure it out. You know, it's a crazy time. All the stock indices down. And, you know, the interesting part was when you woke up this morning and you looked at the markets, they were strong. I have to admit, I was doing this, scratching my head going, I don't see what everybody's seeing. And that bothers me. I want to be more in sync with what I think are some of the better advisors. And I'm going, why is this market up? Fed Chair Powell just told us slower economic growth, higher inflation. And that's what the stock market was rallying on. I'm not saying it can't go higher. It just didn't make sense to me. And by the end of the day, it didn't make sense to the market as it was down today. BND was up. That makes sense to me. You're looking at a market that is basically saying safe haven play. XLU was up a little bit today as well. I use that, and I don't mind telling you, to tell clients, let's take our money off the table in that one. We made a little bit. You don't always win, but you made some there. Not a lot, but better than a poke in the eye. You're looking at the gold market down. GDX was down. Copper market down. Silver market down in this. STNG right up to the upper Bollinger Band. We've just started covering that with you. XOM, I noticed today on CNBC, brand new analyst coming out. ExxonMobil, they want to buy as well. UAL down a little bit. Dell up a fraction. And Uber's interesting. Uber, they broke it down today early, and then they brought the market back up. Settled, I'll call it mid-range. Back under $3 in AMC. Tesla, as you can see, 40 cents higher, and NVIDIA gained a little bit today. You know, the bears are still there talking about NVIDIA. We'll see what happens. Now, I want to remind you, I do a special report. I told you I didn't do it yesterday. I have it today. Stay with me as I finish this, and I'll lead you right into that. It's important, and it does cover, by the way, as well, a fund that trades in this particular market. So we'll talk about that in a minute. All right. As we take a look, and by the way, the reason you're not seeing news is there are no major government reports coming out tomorrow. So yeah, you'll get earnings. You had earnings today in Nike. It's a beat. People are sounding upbeat about it, and I think that that is important. So you want to pay attention. Accenture was in the news all day long today as to whether or not government contracts are going to help them, going to hurt them, just where the heck are they going? And we're seeing that President Trump today, number one, he's in defiance of the court. They gave him just until next week to prove more information on why he didn't have the plane to Venezuela turn around and bring back those prisoners. The judge doesn't like what he did. This thing is headed to the Supreme Court. So I think that that's just what you're saying. The judge will go as far as he can. They're not going to deliver what he wants, in my opinion. There's 140 lawsuits against the president now, and they'll keep coming. Well, one day I'll be telling you there's 280 against him, because that's, again, what happened last time. So history does repeat itself. Not all the time, but it does. When you look at Devon Energy, you can see the market's been coming up. So this is a market that one of our subscribers had asked us to cover for him. And then he wrote me, it was interesting, as the market was coming down, I picked the wrong one. Actually, you picked the right one. That's the simple fact of it. The problem is you're not going to go that far. I don't think you looked at what this whole thing is. You had a vertical decline. The market's given you a bounce, about 50%, and that's about where you're at. The market did clear the 18-day average of closes 4 days ago, and now it's back over the 100, but I don't think there's much left, and that's because the upper Bollinger Band is just above the market here, and I think that'll prove to be a problem at the 36.59 level for the market. So I think you were right. I think your timing when you were saying, I don't like it, was the wrong part. You're also overbought. Whether it goes higher or not, I'll step back from it right here. In Dutch Brothers, all I was looking for was a bounce. And, you know, as I told you, I was playing this one myself when you lost the bearish embedded reading, and that worked out. In CrowdStrike, look for the market to fight a battle between 364.75 and 361.53, the 100 and the 18-day average. The battle is lost for bullishness, in my opinion, if you take out 356.71, where I've got this blue line going right up. But if it holds there on a test, I like the idea of maybe you get to the upper band. The question is, can it make that run without the whole market going with it? That's going to be the big question. Again, if you don't understand what STNG is, I'll stand back here, hit pause, read that, and then you'll understand where we're at. And here you can see how the tankers have come back up. The trend is up, the bias is up, but you're overbought and right into the upper Bollinger Band. What I would like to see out of this is more spinning sideways within the upper and lower Bollinger Band. We then look at Alibaba, and here's the big break coming. So yesterday, this looked pretty darn good, right? So there you are. Whoa, that looks nice. And then boom, the market comes cracking down on you. It's just the way that it goes, and these things happen, and you got to be very careful as to how that is. So you're back into support. If you take out 134.34, there's problems. You've broken then the uptrend pattern. The reality is you got up to the upper Bollinger Band. You were overbought. That's where I think the pros came out of the market, and I'm not convinced they're going back in because the momentum of the market has got one of the numbers over 70, so it's still overbought. When we come to Robinhood, they're coming out all the time with new programs. So now you can go in, win or lose on a bet, I guess, on the March Madness. It's a clever idea. If they've got CFTC approval, why not? It's just another thing. I understand they're not playing the odds and so on. I'm not a bettor with that. We bet all day long. For me, betting on a basketball game, why? I don't even get excited at Vegas. I mean, you're making a bigger bet in futures if you think in this than you are in Vegas. I go to Vegas for the shows and dining. You'll not find me at a table that is very expensive, ever. I set a limit for the day, and I realize I'm throwing the money away. But higher lows, higher highs. Now, are you going to be able to march with this? I wouldn't be surprised that you spin here a little, but I'm certainly in the bull camp, not the bear camp at this point in time. And here's XOM. No, I don't want you to buy with all these analysts coming out at Bollinger Bands and on the first move over a 200-day average and a 100. I am not bearish. Let me make that clear. I think there might be a better point of entry is what I'm saying. Then we get to the financials, which are looking for direction. I think that's the right word. The market rallied right into the 100-day average, the 18. It finished 49.64, literally in between the two. I'll wait a day or two before I give judgment on what it's going to do. All it was a bear market rally so far that could easily slip back on you. Be a bit cautious. In XLI, this was the same thing. So you had a bear market rally that carried up to the 18-day average. You settled over it on the first move. Boom, right back to it today. Now, if this market is good, and I don't know if it is or isn't yet, but if it's good, if you can take out 124.30 again, this high, then you open the door to get up here into the 136.70s. If you take out 131.13, you open the door that you let go. This was just a bear market bounce and no more than that. You're at a funny spot in that chart. In XLE, this is where I think professionals are taking money off the table right now. In GLD, this is where you're still in a bull camp. Even though you're down, doesn't mean anything. The momentum play until this line, the red line closes under 79, keeps you in the bull camp, period. SLV, you're about to lose your embedded reading. In the morning, my guess is you will lose it. You'd have to have some overnight event to make silver give you a really good pop in the morning to prevent that from happening. Now, just because it happens in the morning doesn't mean that all the momentum is lost. It has the whole day to recover it. But it's not a pretty picture going home. Even though numbers are both over 80, it's probably going to get hit because it settled that way. In the copper market, the battleground. The first challenge of a 200-day average and an upper band, and a market that is now, is it embedded? Watch this. Both numbers are over 80. Both numbers yesterday over 80, the day before just barely, but both over 80, not the day before that. So now you've got your embedded reading, which tells me on a further break in the market, as long as the red line stays over 79, you're going to get nibbling by the bulls into the marketplace. In BND, I think today was a day to step away. You got a first challenge of an upper band. If you've taken my courses, you realize what I teach about that. And here's the market momentum up doesn't mean anything. That first test is often the spot that the professional is going to take money off. Why? Because if you understand the concept of the algorithm, 95% of the time you'll trade within it. That does not mean you hit it and you get bearish. It means that if you're not embedded or locked in with that momentum, that's a spot to come out. Coming out is not the same as going short. In UUP, if we can get the red line to close over 21, then I get excited with the market. If it doesn't, and the fact that you close near the lows, I think today is one of the days where the shorts hit the market. I want to tell you that. And if I'm right, you're not going to do that. You're going to drop down tomorrow. And if you do and gain any momentum, watch out. The key will be, can you get back under 28.26? You're dealing in pennies here because you're sitting at 28.41. It's a momentum trade that might carry all the way down there. And that means the flip-flop in FXE. Notice how the market came down. It held, though. The momentum's here. If it lets go from here, then I think you're going to 99.13 to 99.15. I might replace FXE and get rid of it altogether and just look at the dollar index and add another ETF. If you'd like me to do that, write me here, and I'll look how many people write me in about that. So, as I said, we have another opportunity. And I wrote about gasoline. Why? This is the first day of spring. Are you aware what gasoline does at the beginning, now, right into April? Go and look at your charts. This is the phenomena because the refineries switch now from going from winter blends to summer blends. You pull back a little bit on it, and in that, an event takes place. So I go with a 5-year, a 10-year, and a 15-year seasonal to prove my point with you. Then I take you into an ETF and obviously the gasoline itself, both on a weekly and a daily basis. We add all this together with the price count, which hit a third downside. Often that's where the market stops its decline. So I have plenty of reasons to be favorable in this market. Just go to iraepstein.com, look on the top left in bright green. It'll be there for you to take a look. That again, iraepstein.com. Can't make it any easier. Look on your left. You will see the report. I'm Ira. You have yourself a great evening.